Imagine you're looking at a company you're curious about, right? And suddenly, this pile of earnings reports just lands on your desk.
Yeah, it can be a lot.
Exactly. How do you actually cut through all those numbers, the press releases, just to get to what truly matters?
Well, that's kind of our mission today, isn't it?
It is. We're diving deep into Geojit Financial Services Ltd's Q1 FY26 results. That's for the quarter ending June 30th, 2025.
And what's fascinating here, I think, is that we're not just looking at one document. We've got the official filings, a pretty detailed investor presentation, their press release.
So multiple angles.
Exactly. It's like having different lenses,
Yeah.
It lets us view their performance and really distill the essential insights, get the full, maybe more nuanced picture.
Okay, so our goal then is to give you that clear, concise understanding of Geojit's performance. We want to move beyond just the what of the numbers.
To the so what?
Precisely. The so what for this, well, pretty significant player in the India investment services landscape. We'll look at the strategy behind the headlines, try and figure out what's really defining their path forward.
Sounds good. Where should we start?
Let's start right at the beginning. Who is Geojit, really? At its core, they were founded way back in 1987.
A long time ago.
Yeah, and their purpose, helping our customers create long-term wealth, it feels just as relevant today.
Absolutely.
And they've built up quite an impressive scale, over 1.5 million customers, a wide network, 508 offices across India.
That's a lot of branches.
It is. And here's a really interesting point, something I think often gets missed. A huge chunk, like 78% of their branches and 76% of their clients. They're in Tier 2 and Tier 3 cities.
Wow. Okay, so not just the big metros.
Not at all. That's incredible reach into those emerging markets.
It truly is. And that reach, it's backed by some strong players, right? They're key
Yes.
promoters. You've got the global banking giant BNP Paribas, the company's founder, C.J. George, who's obviously key, and the Kerala State Industrial Development Corporation, KSIDC.
So a mix of international finance, founder vision, and state support.
Exactly. It gives them significant institutional backing, and strategic guidance. Plus, they've got an international footprint, too.
Oh, yeah. Where's that?
Across the Gulf Cooperation Council, the GCC, they have joint ventures, partnerships. Barjeel Geojit in the UAE, QBG Geojit in Oman, ties in Bahrain through the Bank of Bahrain in Kuwait, and also BBK Geojit in Kuwait.
Okay, so a diversified presence, not just geographically within India, but internationally, too.
Definitely highlights that.
All right, let's get into the numbers then, the ones that, hit the headlines for Q1 FY26. Consolidated results. They reported a net profit of 28.67 crore,
Okay.
and their total income came in at 153.3 euro crore for the quarter.
Right, about 153 crore.
Now, here's where we start to see that puzzle we mentioned earlier. When you compare these to previous periods, that total income, it actually saw a dip.
A dip, how much?
Down 15% compared to the same quarter last year, Q1 FY25. And it was also down 14% from the previous quarter, Q4 FY25.
Okay, 15% year on year. That immediately makes you wonder, right? What's driving those top-line declines?
Exactly. It's often the first reaction you see revenue or profit drop, and it's definitely a significant signal.
Sure is. But, it's so crucial. We don't just stop there, these headline numbers. They often don't tell the whole story, do they?
Yeah.
Especially in a market that changes so fast.
Absolutely. And when we look at profitability, well, the picture looks challenging for the quarter, too. Profit before tax, PBT,
Yep.
It plunged quite steeply, actually, down 39% year on year, landed at 36.64 crore for Q1 FY26.
Wow, 39%. That's quite a drop from the 59.74 crore last year.
It is, and it was also down 8% just from the previous quarter. Similarly, profit after tax, PAT, that decreased by 37% year on year, reached that 28.67 crore figure we mentioned.
Okay.
Their consolidated PBT margin for the quarter was 24%, and the basic earnings per share, EPS, stood at euro 0.99.
So let's put that in plain terms. While they might be seeing good signs in, say, customer growth or digital stuff, the immediate bottom line, the profitability, it took a significant hit this quarter.
Yeah, it's definitely a mixed bag.
Which is precisely why we need to dig into those underlying business metrics. What specific operational areas are actually showing some resilience, maybe even growth, despite these profit headwinds.
And that's exactly where the story gets much more interesting, because despite those profit headwinds you mentioned, Geojit is showing real muscle in other key areas.
Okay, like what?
Well, it suggests strategic investments are happening, right? For instance, their customer assets. They grew to a pretty impressive 1,011,252 crore as of June 30th.
Over 1.1 lakh crore, that's substantial.
It is. And new client acquisition, it's surging, up an impressive 31% year-on-year, over 33,600 new clients just in the quarter.
A 31% growth in new clients, that's strong.
Very strong. And their executed systematic investment plan book, the SIP book value,
Hmm.
also grew significantly by 24% year-on-year to 129 crore.
Okay, so people are consistently investing more through them.
Seems like it. Even their employee count increased by 10%, which suggests, continued investment in their people, their workforce.
Interesting. What about revenue streams? Any bright spots there?
Yes, definitely. Looking at their recurring revenue-based assets, the picture's even more positive. Their mutual fund assets under management, AUM, that increased by 17% year-on-year, now at 16,069 crore.
17% growth in MFAUM. Solid.
And their Smartfolios AUM, those are the curated stock baskets. They grew even faster, 21% year-on-year to 11,119 crore.
Okay.
Plus, their life insurance premium distribution, that saw remarkable growth, 47% year-on-year.
Wow, nearly 50% growth in insurance distribution.
Huge jump. Now, in their brokerage business, it's a bit mixed. The cash market average daily turnover, ADTO, that decreased. But their derivatives ADTO actually increased significantly.
Ah, okay, so a shift maybe in trading behavior or focus.
Could be. And here's a powerful data point. 85% of their total trading volume is now online.
85%. That really underscores their digital push, doesn't it?
Absolutely. Oh, and their lending book also expanded, up to 760 crore from 650 crore last year.
Okay, this is a really critical insight, I think. When you see those consolidated profits under pressure,
Yeah.
but then you see this strong underlying growth in client acquisition, in recurring revenue streams like MFAUM and SIPs, and that huge digital adoption, it often points to something else.
Like what?
Like a company making strategic investments for future growth, rather than just, a simple decline across the
You're
board.
playing the long game.
Exactly. It suggests maybe a shift in how they're generating revenue, moving towards more stable, perhaps fee-based models, leveraging technology, and that can take time to fully show up on the bottom line.
Diversifying away from maybe the more volatile brokerage revenues.
Potentially, yeah.
Yeah.
Reducing reliance on those streams.
Yeah.
It aims for more resilience.
And speaking of diversification, Geojit has really been building out a comprehensive product and service ecosystem. It's quite broad.
How do they structure it?
They seem to organize their offerings around three core pillars. There's Invest, that covers all your usual trading and investment needs. Equity, mutual funds, currency, commodities, AIFs, IPOs, gold ETFs.
The whole gamut.
Pretty much. Then there's Protection. This covers various insurance types, general health, life, and lending solutions like loan against shares or mutual funds, margin trading funding.
Okay, covering risks and providing leverage.
Right. And the third pillar is Manage Wealth. This is more for personalized financial planning, portfolio management services, global investments, that kind of thing.
So a full spectrum approach, trying to serve a really wide range of client needs.
Seems like it. And digging just a bit deeper into their specialized offerings, they have something called STEPS.
STEPS.
Yeah, it's their fee-based financial planning and investment advisory division. So focusing on things like retirement planning, tax planning.
Fee-based.
Yeah.
That fits with the recurring revenue idea.
Exactly. And their portfolio management services, PMS, they offer 5 unique discretionary portfolios, things like Advantage, Freedom, Dakshin.
And how are they performing?
Well, the claim is they consistently outperform benchmarks, which, if true, is a key sign of strong investment skill there.
Definitely something clients look for in PMS.
For sure. And for those looking for maybe more advanced solutions, they even have something called Geojit Yield Plus.
Okay, what's that?
It's their Category 3 Alternative Investment Fund, an AIF. It's designed, apparently, to generate consistent returns regardless of market direction, uses sophisticated market-agnostic strategies.
Interesting. So moving into more complex, maybe higher value products as well.
Seems that way.
And, what's truly impressive, I think, is how Geojit is building this integrated financial ecosystem. It seems designed for a really seamless client experience.
How so?
Well, take their B2B partnerships. They've partnered with 11 prominent banks.
11.
Yeah, offering these 3-in-1 integrated accounts so clients can manage their bank account, their demat account, and their trading account all from one place.
Ah, okay. That reduces the hassle for the user, right? Makes it stickier.
Exactly. Less friction, deeper engagement.
Makes sense.
And we also saw some significant corporate actions recently there. Just on July 15th, 2025, The board allotted nearly 97,000 equity shares to employees.
Under an ESOS scheme.
Yeah, ESO's 2017 scheme shows, a commitment to aligning employee incentives with how the company's doing.
Good for morale and motivation, usually.
Right. They also appointed a new managing director, Mr. Satish Ramakrishnan Menon, for Geojit Investments Ltd. That's their wholly owned subsidiary.
Is that the one they transferred the broking business to?
That's the one. A strategic transfer involves substantial net assets, about 48,561 lakhs.
Okay. Any other major moves?
Well, we shouldn't forget their rights issue back in October 2024. Nearly 40 million equity shares at 50 thus per share.
Right, that indicates capital raising, either for growth or just strengthening the balance sheet.
Precisely. Important context for their overall financial health and strategy.
Definitely. Now, beyond the pure financials and corporate actions, Geojit's also been getting some recognition, right, for its broader impact.
They have.
They recently picked up 4 Brandon Hall Group HCM Excellence Awards. That was in August 2024.
HCM, Human Capital Management.
Yeah, specifically for their management development program and their cultivating branches of excellence training programs.
Okay, so recognition for investing in their people, their internal talent.
Exactly. Highlights a strong investment in human capital.
And if we connect that to the bigger picture, these awards, alongside their commitment to ESG, environmental, social governance.
ESG and CSR, corporate social responsibility.
Yeah, it paints a picture of a company that's focused on more than just the quarterly earnings, looking at long-term sustainability, societal impact.
So what are they actually doing on the ESG front?
Well, quite a bit, according to their materials. They boast green building accreditation for their corporate office. They pursue initiatives for biodiversity care, actively support a low-carbon economy, focus on reducing water consumption.
Standard environmental stuff, but important.
Right. And on the S&G side, they emphasize having a lean, flexible, highly engaged, and diversified workforce. And they point to active board oversight, a dedicated corporate responsibility committee, even tying executive compensation to ESG metrics.
Okay, so trying to build it into the structure and incentives.
Seems like it. It shows, or aims to show, a holistic approach to creating value.
And there's CSR initiatives, the corporate social responsibility stuff.
Also incredibly diverse. They run something called PRODIS.
PRODIS, yeah, it's a financial literacy program for college students. They do it in collaboration with NSM, the National Institute of Securities Markets, helping educate the next generation.
That's valuable.
Definitely. They also provide direct education support, helping underprivileged kids in 7 villages in Kerala. They offer nutritious breakfast to school students, support poorer students pursuing professional courses.
So direct community support, too.
Yeah. And on the health and social inclusion side, they have SPAR-ARSH, which deals with community health for chronic conditions, cancer screening projects, UDBODH.
UDBODH.
A free dementia daycare center. They also do rehabilitation support and even mental health intervention programs specifically for women.
Wow, that's a broad and pretty deep commitment to the communities they operate in.
It really seems like it goes beyond just writing a check.
For sure.
So let's try and pull this all together. What does it all really mean? We've seen that Geojit Financial Services Q1 FY26 results, well, they presented a mixed picture.
Definitely mixed. Consolidated revenue, profits.
Yeah.
They showed that dip we discussed.
Right. But our deep dive, looking beyond those headlines, it revealed significant underlying strength and strategic moves.
Yeah, that robust growth in the client base, the strong focus on recurring revenue assets like AUM and SIPs.
And those critical investments in technology, remember, 85% online volume and diversifying their services.
It really is a testament, I think, to a company that's actively adapting, investing for the long haul.
Even if the immediate headlines, don't quite capture that full narrative.
Exactly.
Yeah.
Which leaves us, and you listening, with an important thought to maybe consider. In this constantly evolving world of financial services, how do you weigh those immediate quarterly profit fluctuations against, say, sustained growth in customer engagement, or a diversified service portfolio, or those long-term strategic investments in tech?
That's a good question. Is consistent growth in client assets, or that widening reach into markets like Tier 2 and 3 cities, is that maybe a more reliable indicator of future prosperity than just transient dips in the top-line figures?
It's something to think about.
Uh-huh.
And how might Geojit's very intentional push into those underserved Tier 2 and 3 markets position them uniquely for the economic shifts we're seeing across India?
Definitely something to mull over as you navigate your own information landscape out there. Thank you for joining us on this deep dive.